Income Tax 2020. Tax software example, child and dependent care tax credits. Come in, relax with Income Tax 2020. Here we are in our Intuit tax software. You don't need the Intuit tax software to follow along, although I do believe they have a 30-day free trial, so if you can get access to a demo version to practice with, it could be a good tool to do so. We're going to be focusing in here on the Form 1040, primarily the second page, where we will be looking at the child tax credit and other dependents credits. Going back then to the first page, we'll be jumping back and forth from the data input to the forms so that we can run different scenarios, the tax software making it easy to do so. First scenario we're going to start off with is going to be Eric Smith, living in Beverly Hills 90210. We don't have any dependents at this point because we're going to be adding them as we go to concentrate on the changes that will happen. We then have up top the wages at the $100,000, those being the W-2 wages. We then have the $12,400, that being the standard deduction, to bring us to the $87,600. Then on page 2, we have the calculation of the tax at the $15,110. And then we're going to be concentrating then on the child tax credit here that will be on line 19. So we'll be focusing in there. And we may have a child tax credit if it was refundable, which we'll take a look at an example of, hopefully, if we get to it, in the additional child tax credit then down below. Also want to point out now that if we bring the income down to the point where you may be qualifying for an earned income tax credit, we're not going to be calculating the earned income tax credit. We're just focusing on the child tax credit at this point. And those two things could kind of mingle together, or you have to consider them both possibly when considering the refundable portion if your income goes to the point where you may be getting access to both the earned income credit and the child tax credit. But again, our focus here on the rules related to the child tax credit. Okay, so I'm going to go then, if we go then to our tax formula, same starting point, the $100,000, the $12,400 for the single tax filer, that brings us to the $87,600. And then we would enter basically the tax calculation. I'm going to enter the tax calculation here, 15,110. So I'm going to say 15,110. And there we have that. Now, let's go back on over and we're going to think about a dependent now. So I'm going to add the dependent and I'm going to start off with a qualifying child here as the dependent. So it'll show up here and then we're going to have a qualifying child and then that'll have an impact as well. Now, also, it might be the case as we saw with our dependents that if we go from single and have a dependent, we then may well be head of household status. So I'm going to change the status as we do this as well to head of household. So I'm going to go to the detail. I'm going to say, okay, dependent has happened. I'm going to move up to head of household filing status. We're then going to go to the dependent screen. So we're going to enter in the dependent. And I'm going to say the dependent is Sam, is going to be the son. Sam is the son of Smith. Sam is Smith's son, Sam. Okay, and then we're going to say the date of birth is 01/2018. And then I'm going to say the social security number. I'm just going to put in a mock social security number here. Obviously, that's not like a real social security number. Then the relationship we're going to say is going to be a son. So I'm going to say son here. And then 12 months lived with the taxpayer. Child living with the taxpayer, I'm going to say yes. Earned income credit when applicable. Child tax credit, we're going to say when applicable. Let's see what that does. If I go on over to the forms then, let's take a look at the forms and see what happens. We now have Sam here with the social security number, relationship, and we have the child tax credit checked off because they could qualify for the child tax credit as opposed to the credit for other dependents not being checked off because you can't have both of them checked off, and this one's better. So we picked that one because they're a qualifying child, and that's going to have an impact, of course, on our filing status now is now head of household, as we can see up top. So we're head of household instead of single, which will have an impact on the calculation of the taxes as well as the standard deduction. Standard deduction now at that $18,650 to bring our taxable income to the $81,350. If we look at that in our tax formula, we would now change the standard deduction and say now it's at the head of household standard to bring us to that $81,350. And then if I go then to page 2, we're going to have the tax calculation now at the $12,251, and that's going to be changed because the income changed as well as the rates. The filing rates for the progressive tax rates could have changed, so that's the $12,251. So I'm going to say 12251, 12,251, 12,251. Then we have the $2,000 For the child tax credit, we have the worksheet that can see the calculation here. We haven't hit basically the income cap, and $2,000 is the maximum basically for the child tax credit, so we have that. And that is a dollar for dollar kind of deduction, so the $12,251 going down by the $2,000. Now we have to tax at that $10,251 here, and we haven't included any payments or anything like that, although they would be on the W-2 wages. We'd have payments as well, but we're just focusing in on the credits. Now, when you look at our formula over here, notice that we would be basically putting in the tax. We would check this number, possibly put in the tax directly, relying on the software, and then we might then enter in our credit line items the credits that could be applicable in a separate screen. So I might then go to the credits over here and say that we now have the child tax credit $2,000 that's going to pull over to the tax formula, bringing it down to that $10,251, and that matches out our $10,251. Now, if we go over the threshold, over like $200,000, then the child tax credit might start to phase out. So it's a fairly high threshold for single. I believe it's $400,000 married, $200,000 single. So if I went to like $210,000, let's say, and then I go back on over, let's see if that's an impact. There it is, an impact. It's going. Our child tax credit has now gone down to $1,500 instead of the $2,000. We can see the calculation. The 210 minus the 200, which is the cap where the phase out starts, and then it's got the difference of 10,000 multiplying times the 5%, or the 5% to get the 500, and then it reduced the $2,000 credit by that 500. Obviously, if the income goes up much above that, we'll end up having a phase out completely. So if we're at 250,000, for example, 250,000, the credit is now gone. The credit is now gone at the 250. So if I go back on over, I'm going to put it back on down to the 100,000. The 100,000. Now, also note that if we go down below, then that's when we might have this refundable credit. So if I take this tax, gets wiped out by the credit. In other words, if this credit is greater than the tax calculation, bringing the tax down to zero, we may still end up getting some money back due to the child tax credit, because some of it may be refundable. And that's why this credit's a little bit complicated. Also, why the IRS is skeptical of this credit, and it might take them a little bit longer to process it, because it's more likely that people will commit fraud with it by getting the refundable credit. But let's bring it to 20,000 income and check that out. So now on page 1, we see we have the 20,000 and the 20,000 for the income. We've got the 18,650, and we're left with only income of 1,250 for the taxable income. So that's going to be our taxable income. And now the credit brings it down to zero. So obviously the credit up top is going to be capped by what the tax liability is. So we would have gotten 2,000, but it capped it at the 136, so that our liability is now at zero here. So we got the zero liability, but we still get a benefit down here because we get the additional child tax credit. So this is the refundable portion, the portion that's going beyond a zero tax liability, resulting in money, an overpayment, a refund, even though our tax is down to zero. You can see the calculation for that on Form 8812. So Form 8812, I won't go into detail, but the additional child tax credit, which basically means the refundable portion, and then it's calculating the refundable portion here. I won't go into it in detail, but you can read through it there if you would like. So also note again that we're not calculating the earned income credit. So you might, in that area, have both the earned income credit and a child tax credit that could be contributing to refundable portions, and they could have some impact on each other. But we're not calculating the earned income credit here. We're just focusing in on the child tax credit. So then, if I go back over, I'm going to bring the income on back up. Let's bring the income back up to that 100,000 that we're used to seeing. Nice even 100. And so now we got the 2,000 back on the child tax credit. Let's add another dependent then. Let's add another dependent. Say we can afford another dependent. So I'm going to add another one. And then this one is going to be, we'll say Tom. We're going to say that Tom, date of birth, we're going to say 0101 1945, let's say. So we're going to say this is a parent or grandparent, and we'll say that this is going to be 555 5555 for the number, and let's say that this is going to be a grandparent. Let's say grandparent months lived with. So let's say they didn't live with us. Let's say 0 here, and we're going to have the child living with the tax. So we're going to say that dependent other than a child here, and earned income credit when applicable, child tax credit when applicable. Those shouldn't be applicable here, so it should be able to pick that up. So now let's go back on over and see what we have. So now we're going to say, all right, now we've got Sam still there with the child tax credit, and now Tom is going to be here and not qualifying for the child tax credit, but qualifying for the credit for other dependents. So now we got the credit for other dependents going down. We see the 18,650 again. We get to the 81,350. Then going to page 2, we then have our calculation of the tax, and now we're at the 2,500 for the child tax credit or credit for other dependents, going up by that 500 due to the second credit that we have here. So then we have the 2,000 and then the 500. That brings us up to the 2,500. We have no income limitation cap that's being applicable, so we're taking that 2,500 as the credit. There's no credit down here because we don't need the refundable portion. We can take the whole credit up top, and it doesn't bring our tax liability below 0.